The retail sales data corresponding to the month of May was just reported. The data confirmed that the U.S. economy has been slowing down considerably since April, particularly when you look into the details of this report. Now, for context, retail sales data are some of the most important economic data that the government reports each month. Retail sales data are the primary indicator used to calculate personal consumption expenditures, which constitute over 60% of US GDP. Now, if you're watching this video, it's probably because you realize that in order to understand what is really going on in the US economy, you can't just rely on headline figures provided by the mainstream media. So in this video, I'm going to share with you the most important insights that I have derived from a detailed report that scrutinizes all of the data for each and every one of the 13 categories that comprise the overall retail sales data. This analysis includes inflation adjustments to the data that you won't see anywhere else. By looking closely at these numbers, we're going to be able to come away with some really interesting insights about the outlook for the US economy and for the outlook for financial markets. Before getting into the more detailed analysis, let's look at the headline data as reported by the government. First of all, current dollar retail sales, not adjusted for inflation, accelerated relative to last month, which was a bad month. However, it surprised analysts to the downside. The control group sales also accelerated, but again, it surprised analysts to the downside. The control group data, which is a subset of the overall retail sales data, is something that analysts tend to track very closely because it's used by the government to calculate certain important components of GDP. Now let's get into some of the more interesting details in this report. The first interesting detail in this report is that the data for April, which was already bad, was actually revised down significantly. So April was really a terrible month for retail sales. The second thing that I would like to focus on as an interesting detail is that the overall surprise in this report was very large because the data for the month of May surprised, and in addition, it was a surprise that the data for April was revised down. So the impact that this had on the 3-month trailing rate of growth, in other words, the rate of growth calculated for the last 3 months, went down very substantially from an expected figure that would have ranked in the 56th percentile to the actual figure, which now is down to the 33rd percentile. So retail sales growth is growing substantially below average at around the 33rd percentile of historical growth. Now I'm talking about the inflation adjusted retail sales data, not the nominal data that the government reports. Now what does this mean for the US economy? Clearly, the most important thing that this means is that the US economy has been slowing down very significantly since April. So growth in the second quarter of this year so far is going a lot slower than it was during the first quarter of this year. Is the soft landing that the market has been counting on and that financial assets have been pricing in risk now as a result of this slowdown? Honestly, we don't really know yet. I think it's going to still take at least another couple of months to see if this slowdown is something that's going to stabilize with growth at a relatively low level, or maybe if growth can rebound, or if maybe this is actually the start of a trend that could put the soft landing in jeopardy. For markets, I think there's a couple of implications here. First of all, in terms of bonds, I think that the slowdown in the economy, to the extent that it continues to be confirmed by more data, opens the door for bond yields to continue to fall towards their recent lows and even beyond those recent lows. So this is actually bullish for bonds. Now for stocks, I think the news is a lot more mixed. On the one hand, lower interest rates is something that is generally positive for stocks, but on the other hand, a slowing economy generally means slowing profit growth for US companies. So it's a little bit of a mixed bag for equities. And since equities are pretty richly priced right now, particularly in several tech-oriented I-oriented segments of the market right now, conditions for equities are probably a little less favorable than they are for bonds. So this concludes my analysis of retail sales and its implications for the economy and markets for today. In my next video, I'm actually going to review the industrial production data that was published today, which was very interesting. And for those of you who are my subscription service, I'm going to have a more detailed video where I actually go over some of the more nitty-gritty details of the retail sales report today, as well as some issues that concern particularly our portfolios. Thanks for watching, and be sure to hit that subscribe button.